Hello there, my name is Thomas O'Regan and I'm a professional property investor here in Australia. Now I want to go over to the 5 reasons why I am investing in high-rise apartments at the moment. Now, most people say high-rise apartments are the worst investment ever, but if you understand investment principles, you'll be able to see that in this particular situation, they're actually a fantastic investment. Now I'll just quickly go over what the 5 things are. So in Melbourne CBD at the moment, high-rise apartments are supply constrained. You can get high-rise apartments in Melbourne CBD below replacement cost. You can purchase CBD apartments in Melbourne CBD with capital growth potential. Also, they are excellent on cash flow, meaning from the first day you purchase these high-rise apartments, the cash flow supports itself, as in all the strata bills, all the property management bills, every cost you'll incur as a property owner, the rents are enough to cover that, including the mortgage, even if you are on a high mortgage interest rate at a high LVR. These apartments still support the outgoings, the cost, right? So that's pretty rare today. Now, one more thing is Melbourne CBD, or Melbourne in general, is at the start of a property market cycle. Now, I would recommend anyone that's a property investor to thoroughly understand how market cycles work, because that is one of the, understanding when to purchase properties and where to purchase properties at what time will make you far more wealthy than just purchasing properties anywhere and hoping that they'll go up. Okay, so basically let's dive a bit deeper into those 5 topics. So you may think at first glance that a high-rise apartment is not supply constraint because someone can simply just build another development next door, another 500 apartments right next to it. But the thing you actually have to understand is, would a developer purchase, or would a developer undertake a construction to develop an apartment complex if it is not profitable for that developer? The answer is no, because developments are not for charity, developments are for profit. And if you dig a bit deeper and you understand the numbers, you'll understand that it is a developer to start an apartment complex needs to sell each individual 1-bedroom apartment for $500 to $550,000 just to make a profit. So if you have that knowledge and you look at the marketplace in Victoria and you're seeing that apartments, 1-bedroom apartments, are around $300,000, then you just know that's good value. Again, the other point that I made is the apartments are below replacement cost. Now, what is replacement cost? That is, as I said, if you were to build another like-for-like apartment, there would be a developer involved, there would be a builder involved. The developer would take on finance to fund the project. That would be at a cost. So there's hard costs, there's soft costs, there's developer's margin, there's a whole lot of costs that the project will incur, and that ultimate figure equals $500 to $550,000 per apartment for them to build it. So I'm going to say, unless the actual existing stock on the market increases substantially, I don't see why, and it doesn't make any sense for a new development to start attempting to sell new developments at a $5 to $550K price point. Because why on earth would somebody pay that much when there's already an existing stock that's maybe 5, 10, or even 15 years old, the older stock, that is just the same. Now moving on to the next one, cash flow in this environment, or I would say as a professional investor, you really have to understand and appreciate how cash flows fit into a property portfolio. And that is, as a professional property investor. I want to highlight that. If you're a professional property investor, you effectively live off your investments. And if your investments are absolutely negative cash flow, then how are you making money at all? How are you surviving? How's your property portfolio, your investment portfolio, not cannibalizing itself, and how are you managing to live off your investment portfolio if you haven't got that simple foundational principle right of cash flow, right? So obviously, if you are professionally working as a property investor, cash flow is critical, because ultimately that is what you live off. And if you have negative cash flow, then you as the investor have to go out and get a job and work to support your property portfolio, not the other way around. As a professional property investor, your property portfolio is meant to support your lifestyle and its own growth. So that is super important. And as I said, these high-rise apartments in Melbourne, they are more than enough to support all the expenses, the mortgage, and then kick off a little bit of positive cash flow on top of that. So each time I purchase one of these high-rise apartments, I am increasing my cash flow. I'm increasing the amount of money that I have to live off for my lifestyle. Now, capital growth and these all sort of play into each other. Now, Melbourne, and this goes for everywhere, property markets go through market cycles. So they go through flat periods, they go through boom periods, and they go through downturns, okay? Now, if you have been tracking the Melbourne property market cycle, especially CBDs, since 2010, there was a high-rise CBD apartment boom. And that was because these high-rise apartments were being bought by foreign investors off the plan. And keyword, off the plan. These properties were being sold from anywhere from 400,000 all the way up to, and I'm talking about one-bedroom apartments here, to 550,000. And that was over a time period from 2010 to 2000, and I think the boom sort of started to slow down in 2018, and it obviously came to a complete halt when COVID started. Now, these apartments were being sold for inflated prices, as I said, for anywhere from 400,000 to 550,000. And if you guys don't understand how capital growth works, if you're buying at an inflated price, there's a good chance that your property is not going to get any capital growth for a long period of time. And in most circumstances, what actually happens is the property, because the price is so inflated, it actually retracts, it comes back down. So what is going on with those prices today? So those prices have come back almost 50% of what their original purchase price was off the plan, meaning that they are, in my opinion, holding value at their price. They've hit the bottom of the market and they're at their price. So the market cycle from 2010 to now has just basically stayed stagnant or even come backwards for some apartments, and now they're at, and you can purchase them at and below replacement cost, meaning there's only one way for them to go. So that's why I'm super bullish on investing in these high-rise apartments in Melbourne at the moment. I know that most investors, I wouldn't actually call them, I'll say investors, but not professional investors. I would say most novice investors, most property investors that have 1, 2, or 3 properties, or most property buyers agents do not recommend high-rise apartments. And I'm not recommending them to you, I'm just telling you guys what I'm doing. And that is, as an investor who uses foundational principles, that is cash flow, below replacement cost, capital growth potential, supply and demand. I look at property markets through these lenses. I look at property markets to see what time of the market cycle they're in to make my investment decisions. I don't make decisions based on recommendations from people I don't trust. I don't I don't make decisions based on hype, and I just basically follow the numbers, and because of that, I've had a lot of success in my property investment journey so far. See you guys next time. Bye.